Thanks, Adrian. Morning, everybody. It's Thursday, which means that there's not a lot that I need to discuss in light of our workshop earlier on in the week in terms of data, etc. But a number of people have asked me just to review it, just so they can understand what's gone on. A lot to say this morning. Commodities, just a general note. Commodities are a lot more volatile than other markets. I know Adrian's been mentioning... Yeah, hi, John, thanks. I know Adrian's been mentioning a few commodities that he's got up here. This is platinum, I think, isn't it, Adrian? PL, platinum, yeah. These markets move fantastically fast. And so you need to be very, very careful. I used to do a lot of sugar, cocoa, coffee, so soft commodities back in the early 80s. And the swings you get in these markets, I mean, I used to do a lot of sugar, for example. And sugar trades fantastically well. So if you're an end-of-day trader, look at this. You get some beautiful swings in this. But we're talking about moves of, 19 cents a pound up to 24 cents a pound. So, we're talking about 25% moves in the space of 2 months. So please be careful when you're trading some of these markets. Gold, silver. Look at crude oil. We've been talking about crude oil this morning. These moves, fantastic. For those of you watching the end-of-day moves, we've come back right to the bottom of the envelope in the space of 3 days. Any of those that you managed to short it when this signal was given has made some very nice money in a very short space of time. Largely thanks to, first of all, the oil stocks, which were unusually high, I should say, and also Saudi looking to bring the prices down. They've often talked about doing this, but I think someone has, one of the Gulf-based oil officials, saying that crude is too high, and I think by saying it's too high, I think it really has pricked the bubble again. We've had 2 substantial moves now in the last 4 days, so there you have it. Crude has turned. The worm has turned. Bit of a paradox, really, if you think about it. Crude oil, dollar-based commodity, with the dollar falling sharply last week, as we know, you'd expect all dollar-based commodities to rally, and of course they largely did. But obviously that was on the back of QE. Really, the QE has been been brought into play because economies are weak, because the Eurozone is weak. They're supporting the weak peripheral economies, because the US is slowing down markedly, and the Fed are worried about the unemployment situation there. So economies are not doing well, and we only need to look at the headlines. Let's have a quick look. Just look at the world markets. Well, there we just saw it on that previous screen, in fact. Japan suffers steep fall in exports, is the headline here on the FT. China factory output remains subdued. So a lot going on, and it's not positive, though, is it? And really thinking about it with crude is, they don't make crude anymore. It takes a few million years to be laid down, as we all know, an organic product. It's subject to that sort of sentiment in the market in terms of the economy. Is consumption going to increase, etc., etc. But you'd have to say, looking at all these headlines, that the consumption of oil is not going to increase if economies are going to be slowing. And all the headlines we're seeing now, do sum that up. So it's a little bit weird to see the way crude got squeezed up, and it is a little bit of a technical market. So you got a lot of fund managers were wading into crude oil in a very heavy way, and I think the bullish consensus, which is a measure of how long the market is, how invested fund managers are in crude oil, and I think it was overcooked, I'm afraid, and that's one of the ways to use those readings when you see there's no one left to buy it, effectively. John, they have told Saudi to up their production to get the price down. That's right. Yeah, effectively. No, well, we don't like to say we've told Saudi to, but I think the prospect of these extra supplies, I know that the Western oil sanctions against Iran have depleted supplies, and I think Saudi has really sort of been stepping in, offering this extra oil to its customers to make up for the lack of supply from Iran. So there's sort of quite a sort of a regulating influence, Saudi, in a way. Obviously, they've got massive supplies of oil, so they can really do this. And of course, they're very much a very big friend of the West. So yeah, I agree with you, John. Okay, markets have been tugged from pillar to post this morning. I'm sure you've noticed. Does anyone know what's going on and why this is all happening? Well, do we know why the euro has fallen as sharply as it has? Photos of Kate. Alan, thank you very much. Alan says it's something to do with photos of Kate. We don't like those nasty Johnny foreigners publishing pictures, naked pictures of our future queen. What a shambles that is, eh? Yes, nice one, Alan. No, not this time. No, not photos of Kate, but, well, it's... we talked on Monday about what the markets have done the previous couple of days. The markets have run up markedly. When you get a big move up, we basically said, or I said, we're looking, and I remember using the words backing and filling, which is really, let's just take a look at the daily. When the markets have a big move like this, there's always the sort of propensity for the markets to try and just sort of settle back a bit. A lot of people have got some good profits on the long side. There's quite a bit of short covering as well. And if we look at the 240, when we convened last on Monday, we were sort of in sideways mode. So it's very, very difficult to recommend shorting anything because it could have carried on. But as I suggested, the backing and filling mode took hold over Monday. And really what's happened since then, we've had an acceleration in the retracement, and that's largely through data, really, and a slight risk-off mode or profit-taking on the risk-on trade. So if we have a look at the data again, we go to trend signal. Stop me if I'm going too fast. Denby are bringing out Kate Jugs. Yes, my the chap who runs my local shoot sent me saying he'd seen a couple of jugs at the Duchess of Cambridge, on the Duchess of Cambridge, and it was actually a pub. I think there's the Duchess of Cambridge in London, which I thought was vaguely amusing. It's probably the cleanest joke he's ever sent me, actually. But yes, there's quite a few of them, Charlie. Alan, thanks for that. Anyway, the calendar, if we go to Trend Signal, click on Free Trading Tools, and if we launch the calendar from here, it keeps it all within Trend Signal, which is nice, so we can flit in and out of this part of the website. Data this morning, well, we've had this manufacturing data from both France and Germany. France was shockingly poor. The manufacturing data was expected at 46.5. Anything above 50 is expansionary, anything below 50 is in contraction mode. So you can see it's really fallen off the edge of a cliff in France. That's what caused the euro to slip quite sharply. We then had, about 20 minutes ago, the German data on manufacturing, the flash or prelim manufacturing purchasing managers index, and that was actually better than expected, but still in contracting mode. Anyway, cut a long story short, the markets are still under pressure. We know the 240, they're all pointing down. It's a tough one today because looking at these markets here, you'd have had to have been up in the middle of the night. Hey, we don't get it all our own way. You know, I have told you in the past that typically we don't get many big moves in the middle of the night because there aren't so many earth-shattering moves that affect our European-US pairs. Having said that, though, the news overnight was very interesting. I will flit back to my calendar quickly, just so you can see the news on Japan suffering steep falls in its exports. That's something that was released overnight. That's hit the markets quite badly. A steep fall in exports in August. They've got a trade deficit, Japanese trade deficit. 754 billion yen was one of the widest since last March. And last March is when we had that Fukushima crisis and the closure of all those nuclear reactors. And it actually turns out now, I think Japan's now recorded trade deficits in each of the 18 months since the earthquake and tsunami. And remember, that really is, prior to that, Japan has just had decades of trade surpluses, obviously. So quite sort of shocking there in a way. Other data as well. We had this HSBC flash manufacturing. It's important to know all this because this has laid the foundations for the moves that we're seeing when the market opened at 8 o'clock this morning. This has all happened overnight. HSBC's flash manufacturing PMI for China, that came out as expected, in fact, slightly better, but it's still in contraction. Anything below 50 is contracting, which is really, as the FT said, reinforcing market expectations that the Chinese economy is on track to slow further. The fact is, it's leveled off, but it's still contracting, which is a worry for the rest of us because, as I said to you in the past, it was the only bright spot. Where we look now is God only knows for the time being, but it seems to be a sort of a race to the bottom at the moment. Anyway, other than that, we've had some sort of mixed data this week. It seems Germany's numbers seem to be getting a little bit better than expected. We had that key data, if you remember, on Tuesday, the ZEW Economic Sentiment Indicator, but still below zero, which is not good, better than expected, and certainly better than the August number. So generally, we're in backing and filling mode. The long-term trend, when you look at the daily, I've flicked back here to my multi-currency page. We can change it to look at the daily on all these pairs now. And you can see cable possibly under threat, euro-dollar possibly under threat. Remember, it is not relevant until the candle is closed. On the daily candle, we're only interested in what this has done by the close tonight at 8 o'clock. So markets generally in sort of pause mode for the time being, and I think the headlines certainly for today have not been at all positive. Hence the reason why you're seeing quite a bit of a sell-off in the forex markets and in the equity markets. I think the FTSE is still 40 points lower for the time being, which is it's quite a pullback really, and I think it's got a little more to go if we look at the charts on the 240 minute. But anyway, listen, guys. Any other questions, please? We're pretty much towards the end of our session here. I think I need to pass you back to Adrian for one last goodbye. But really, the data for the rest of the week, we had that discussion on Monday, so most of you know what we're expecting for the rest of the week in terms of data, etc. So I won't really go over that. I mean, the main one is the Philly Fed this Thursday, today at about, I think it comes out at 3 o'clock. Just have a quick reference to that. Sorry, yeah, it comes out at 3 o'clock. I apologise. So that'll be watched quite closely. But other than that, that's pretty much it on the data front, as I say.